staffing company is also off and away, growing gangbusters in Europe. That would be Manpower. Up next, my one-on-one interview with Manpower's chairman and CEO. He will be here to tell us about the jobs market right here, who's hiring, who's not.
And we'll show, or we all know, I should say, that sex sells, so now marketers are targeting the baby boomers, from dating services to drugs that help in the bedroom. Our special series, Boomer Nation, after the bell.
Now online, columnist Tim Middleton says investors stuck in a buy and hold mentality that worked in the 90s need to update their thinking. Check it out on Cnbc.com, on MSN. Back in a moment.
Software company in the world and dinner with the world's richest man. Reports continue today on CNBC.
Hello. Stock market in a year. Dow Jones Industrial Average good for just short of 200. The Nasdaq picks up 45 points. You can cite the Fed minutes for that rally. Again, the ratification of the belief that the Fed will be done soon, that they're aware they could go too far. All of that comes together and the market off and away. The other thing out here, a little piece of news for you. Washington Mutual out with earnings. They're supposed to be after the bell. They come out a couple minutes early, so we'll give them to you. 98 cents for WAMU. They're expected at 90 cents. Revenue number $3.87 billion, or 3.436. Stock picks up some momentum on the news here. More than 1% the advance. They're a big mortgage lender, so things healthy for them in the first quarter. Maria.
All right, and if we close with a 200-point rally today, Richard Peterson over at Thompson Financial tells me that's going to be the 66th best day for the Dow. That would rank in the top 1% as far as performance on a point basis and percentage basis for the Dow Jones Industrial Average. So we'll be watching that as we approach the close. Employment services company, meanwhile, Manpower, reporting first quarter earnings today, beating estimates. The company earned wages have really not moved very much. Are wages growing again? And let's not forget that we've seen some inflation over the last year or so. So when you actually incorporate the fact that inflation is there, some people, even though wages are up a little, are talking about having a
Blockbuster day for the Bulls.
And we're coming right back with the closing countdown. And earnings season getting serious for the technology sector. IBM, Motorola, Texas Instruments, and Yahoo all out after the bell. Our reporters on them all. Back in a minute.
Countdown is sponsored in part by Ameritrade.
Well, the biggest update for the U.S. stock market in about a year. Dow Jones Industrial Average will go out somewhere around 190, 192 here. NASDAQ good for more than 40. S&P 500, 22. The closing bell rings. The Bulls in firm control at the bell. The closing bell continues right now with Maria Bartiromo.
Hi, everybody. Good afternoon. And a strong rally on Wall Street today, fueled by the Federal Reserve's latest minutes, despite the record crude oil prices today. Full market coverage, all the details on the day we saw on Wall Street just ahead. Also today on the bell, some of the biggest names in technology and biotech out with earnings right after the close. Any moment now, we're getting the numbers that will likely tell us what has happened in business over the last 3 months and perhaps what's ahead. We have all of our reporters and our CNBC earnings team in place, reporting on IBM, Yahoo, Texas Instruments, Amgen, and Motorola. It's all covered coming up. It was all about free love. Baby boomers defined a generation by being on the front lines of the sexual revolution. Now boomers are on the front lines of another sexual revolution, and U.S. businesses are making billions as a result. We continue our Boomer Nation series this week. U.S. companies are still losing billions of dollars, however, to intellectual piracy. It's one of the subjects topping the agenda today as Chinese President Hu is arriving in the United States today. Later on the closing bell, we'll take a look at the high stakes for high technology as we continue our week-long look at China on the closing bell. First off, Wall Street action, a rockin' rally for stocks today. Stocks posting the biggest and broadest gain in about a year after the Federal Reserve's minutes of the March meeting showed policymakers considered the end of the interest rate increases at that meeting. They said the end was likely to be near, their quote, not mine. Some Fed members even expressed concerns about the dangers of tightening too much. Check out what that meant for the market. The pop in the market when the Fed minutes were first released happened at about 2 o'clock Eastern today, and the Dow today logging its biggest point gain and percentage gain since April 21st, 2005, and things got better as the day wore on. The NASDAQ also strong today, up about 2%, 45 points higher at 2356. S&P 500 also strong. Take a look at that chart for the intraday, and we see a gain at the close of 1.75%, 22 points higher at 1307. That was the biggest percentage gain for the S&P since April 21st as well. The NASDAQ posted its percentage gain of about 2% again, April 21st, the last time the index posted those kinds of numbers. Also helping out today, some economic data, which certainly showed some good news for the markets. The producer price index jumping 0.5% in the month of March. That was slightly above expectations, but the fastest growth rate in 3 months. When you take out, however, those volatile food and energy components, the core PPI edged up just 0.1%, and that was the positive, the slimmest rise since November. Let's get down to Wall Street. Bob Pisani, our eye on the floor of the New York Stock Exchange. Bob.
Boy, was this the most fun I've had in a long time as the stock market reporter. It was a complicated day full of a lot of cross currents. All right, I need to get a life, I admit it, but it was really fun and interesting. Look, here's the headline and what's going on. And Maria gave you the key point thing, which is this is the best day that we've had in the Dow and the S&P 500 in a year. Believe it or not, what we just had today. We had a very broad rally, more than 3-to-1 advancing to declining stocks. The up-down volume is amazing, almost 10-to-1 up volume to down volume. Interest rate sensitive stocks rallied throughout the day. Commodity stocks rallied throughout the day. Industrials rallied throughout the day. Brokerage stocks were especially strong. Merrill had a great report. Jefferies also did. A lot of them were at new highs overall. Why exactly did all of this happen? Here's what's happening. There were three separate rallies throughout the day on 3 separate news events. First, you heard from Maria. In the pre-open, we had a very nice little rally on the weaker core PPI and on the weaker housing numbers. That's what's really important here. Secondly, after that, at 11:45 Eastern Time, the head of the San Francisco Federal Reserve, Janet Yellen, said Fed funds were close to neutral. That ignited another rally in the stock market. And then about 2 o'clock Eastern Time, we put up the Fed minutes. That was another cause for a rally. And here's the line that people cared about. This is what the Fed said in their minutes. Most members thought that the end of the tightening process was likely to be near, and some expressed concerns about the dangers of tightening too much. That's the key. That's what caused the market to move ahead for the third and final time at this point. Here's what else is important. Oil, high oil at record levels did not drop the markets, Maria. Secondly, the rally occurred independent of all the earnings reports that were going on. And finally, Maria, the best volume in over a month. We're going to do 1.9 billion shares. Back to you.
Bob, thank you. And stocks rose even in the face of another record day for oil prices. Light sweet crude setting new highs today. In addition to setting new intraday highs, light sweet crude also hit a new all-time high, $71.35 a barrel on crude oil. Fears of a supply disruption roiling the oil market yet again. Those jitters were stoked by ongoing tensions over Iran's nuclear program, along with concerns over threats of further militant attacks at a key Nigerian oil facility. Earlier, President after the bell tonight, oil prices, as you just saw, and China, all being watched closely. Joining me now to talk about that, Mark Klee, Executive Vice President of American Fund Advisors, Mike Darda, Chief Economist at MKM Partners, and CNBC Senior Analyst Ron Insana. Gentlemen, nice to have you with us. Thanks so much for joining us. Pleasure. Let me begin with you, Mike. Talk to me a little about what went on with the Fed minutes today. Obviously, a reaction in Wall Street. You think the Fed is almost done with raising rates?
I don't think that. Apparently, the market does. We got some soft data on housing today, a PPI report that looked good in the inflation front, combined with some dovish comments, or at least that's the way the market interpreted it, from Janet Yellen, and then the Fed minutes. All of that combining to fuel what I think is an excess liquidity trade. You can see it in gold. The dollar got hit. Credit spread's very narrow. So I think that's ultimately inflationary.
Talk about an excess liquidity trade, Ron. That's what we talk about every day, right? There's so much money sloshing around. Today, it's moving into equities and commodities as well.
It's moving everywhere, Maria. There's so much money it can't find a home. I mean, that's the problem. You look at hedge fund inflows, you look at mutual fund inflows, you look at inflows in the stock market directly, into commodities. There's money all over the world that is just, flooding into a variety of different investment vehicles. And until something happens to disrupt it, it's not going to stop because performance is good, and that's bringing more people into the market.
Well, that's the thing. I mean, money is flowing all around the world until money is not flowing all around the world anymore. I mean, when does the music stop?
You tell me the event, and I'll tell you when.
Mark Lee, have you made any changes to the money that you're overseeing or the recommendations that you make to big mutual fund managers as a result of the things we're talking about today, the price of oil, the move in commodities, or this move in interest rates?
Truthfully, I've been a little bit more bearish than the market seems to be. I guess, Mike, I'm in your camp. I'm worried about inflation. I'm worried about what's going on with oil prices. I think Ron hit the nail on the head. This is a case where the world is looking together, and as a consequence, you can't look at just the U.S. You have to look at it in the global economy. I do think equities can move their way a little bit higher, but overall, I just don't see a lot more headroom for them. There isn't enough good news coming out of the economy that I think can overcome higher interest rates and higher commodity and inflation.
Well, what is that saying? The market climbs a wall of worry, Ron?
It does, and listen, I mean, you've got Arab markets that have essentially crashed, and so now you've got oil at $71 a barrel, so wealthy Arab families have cash coming in. They don't want to invest in the domestic market, so they're shoving it into oil futures or gold or other types of commodities, into U.S. Treasury bonds, and mitigating any increase in long-term interest rates that we might have otherwise seen. OPEC was a big buyer of bonds in the first portion of this year. All
right, well, we talked about commodities. Now let's talk a little about earnings. Motorola just coming out with earnings right now. Company coming out with the first quarter numbers, talking about digital set-top box shipments over 2 million. Motorola is a stock you've spoken about before, Mark. Tell me what you feel about Motorola right here and the competition that is swarming around the company around the world.
Well, it's an interesting business right now. What you've seen in the last couple of weeks, Nokia comes out with an announcement that average selling prices are actually going to be higher than expected, exactly the opposite of what you'd think. Why? Because where is the real growth? It's coming from nations like China, like India, where they're going with lower handsets. Motorola probably beat the numbers. I haven't seen what they are yet.
27 cents a share in the first quarter versus 28 cents a year ago. Also talking about the second quarter, expecting sales to come in at $10.3 to $10.5 billion on Motorola.
Stock will probably go down on those numbers because whispers were saying 28, 29 cents. We are not long Motorola. Basically, we're a little concerned because the stock has had such a run here. I do like the handset business. I think Motorola has done a wonderful job of turning the company around, of transforming itself. Nevertheless, I think a lot of the good news is already priced into the stock, and with that kind of a number, I think that's a disappointment. Again, obviously, that's pending what happens on the conference call.
Company says that the first quarter handset shipments of 46.1 million units. I want to talk to you, Mike, about really where the growth in terms of sectors are coming from around the world. But let me get to Mike Huckman. He's actually watching Amgen earnings. Those earnings also just coming out. We'll get back to the discussion on the markets in a minute. Mike, what can you tell us?
Good afternoon, Maria. First quarter earnings from the world's biggest biotechnology company, Amgen. The situation is that this company beat on the bottom line, but it missed on the top line. Amgen comes in with first quarter earnings of 91 cents a share. That is 2 cents better than the street had been expecting. The consensus, according to Thomson, was for 89 cents. In addition, Amgen is narrowing the range for its full year 2006 guidance to a range of $3.60 to $3.70 a share. Its previous forecast was $3.55 to $3.70. Right now, the consensus is for $3.62 a share. However, as I mentioned, this company missed on the top line. First quarter revenue came in at $3.2 billion. The street was looking for $3.3 billion, and specifically, 4 of the 5 top-selling drugs at Amgen came up way light in sales. For example, Epogen, $604 million. That's the only one that beat. The street was looking for $596 million in sales. Aranesp came in at $893 million. The street was looking for $907 million. Neupogen and Neulasta, the street was looking for $928 million. It came in at $896. And finally, Maria, on Enbrel, the rheumatoid arthritis and psoriasis drug, Amgen came in with $658 million in first quarter sales. The street was looking for $716 million. So a big miss in sales on that drug, which is facing increasing competition. The company's holding a conference call at 5 o'clock Eastern Time. Back to you.
All right, Mike, thank you very much. And back with our panel here talking about the earnings picture. Mark, you said that Motorola stock would likely go down on the numbers that we just brought our audience at 28 cents. The stock is actually down 3%. So good call on that one. Where's the growth coming from as far as sectors are concerned in this economy right now?
Well, Maria, I think you want to stay leveraged to nominal GDP growth, both globally and in the U.S. And that means really everything from tech to industrials to, I like employment agencies as a sector, a great beneficiary of the labor market continuing to tighten and wages and incomes rising.
Right. We talked earlier to the CEO of a staffing company, actually, Manpower, which is doing well. Ron, what are you hearing as far as technology is concerned? People pouring money into that group for sure lately.
Well, they have been, but as yet we haven't seen maybe until Microsoft's new suite of products comes out at the start of next year,
which was delayed, right?
Which was delayed. When that comes, some people think that will jumpstart the technology spending cycle. I think obviously, in places like China and India, you're getting a lot of tech buys. But still, business spending in the United States, while improving, isn't quite as strong as a lot of people thought it would be by now.
All right, and we've got more technology names. I know that you're also looking at IBM. We want to get your reaction to the IBM numbers just out. Let's get to Erin Burnett. She's at the News Alert Desk with the IBM numbers. Erin.
All right, Maria, and a busy day for tech earnings. Here are the numbers for IBM. Revenue down 10%, in line with expectations. Earnings per share, though, the outperformance for IBM, those are coming in up 27%, more than the 23% rise, which had been expected. $1.08 is the number at the bottom line. That is 3 cents ahead of expectations. And CEO Sam Palmisano in the press release saying, and I quote, IBM had a good quarter with excellent earnings per share results. Also, Maria, just to make sure you have these numbers in terms of revenue growth on the top line, we did see that software revenue was up 2% at $3.9 billion. Global services revenue, crucial for IBM, $11.6 billion, down 1%. And the hardware revenue at $4.6 billion was down 32%. And Maria, the reason we're seeing that, of course, is the sale of the PC business to China's Lenovo Computer. So that is the latest out of IBM. Back to you.
All right, thanks so much. And Mark Klee, we're talking about IBM. Is this a mature business? We just heard the numbers from Erin. Or is this an area where you think we'll see growth?
It is a mature business, but they've changed their business model around over the years, and they recognize that too. This has truly become a services company, not a hardware company. It's in the classic case, this is not your father's IBM. And the real strength of this company and the real growth is going to come from the services side. They are now actually among the most dominant services companies in the world, and that's the number to watch for here. It's not the earnings as much as it's the services number.
And overall revenue coming in at $20.7 billion. It looks like the market likes these numbers. That stock is rallying in the extended hours, but as you noted, Motorola is actually trading down in the extended hours. Give me your recommended allocation right now. Stocks, you've got bonds. Look, 5% on the 10-year or in the 30-year, not so bad, right? Real competitiveness for equities, no?
Not really. I actually am pretty down on the bond market. I think rates are going to go a bit higher, so that I think stocks are much more attractive. Nevertheless, as I said a few minutes ago, I'm not that bullish on the stock market, so I'd have a little bit above average cash position to take advantage of the higher rates, but be tilted more away from bonds to get that cash allocation.
It's interesting, Maria, if you do think the Fed is coming toward the end of its tightening cycle, someone like Robert Kessler, who manages about $10 billion or so in bond, would do the following. He would buy the 10-year note and then roll down the curve and start buying the 2-year, because the 2-year actually performs best after the Fed stops raising interest rates. Now, the only problem with that thesis right now is if these inflation indicators like gold and copper and other things keep going up, the Fed also said in its minutes today that it is now data dependent and it will continue to make moves based on new information that it gets.
Right.
So if the new information is inflationary, they keep raising rates.
Oh, always data dependent, that's for sure. Good to have you with us, gentlemen. Thank you very much. Mark Klee, Mike Darda, and Ron Insana. And for all of the up-to-the-minute market dispatches, including analysis and commentary, do go to our website, cnbc.com on MSN. Just hours ago, Chinese President Hu Jintao landed in Seattle, Washington, for the start of an historic 4-day visit. CNBC's Jim Goldman is in Redmond, Washington now with more. Jim?
Hey, Maria, good evening to you. Yeah, indeed, this is